The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 25th magnificent Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I am grateful for your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential, because living up to our potential, well, that is what we must master each and every day. So let's start off the day by taking a look at a great belief system out here. Some of the biggest challenges, folks, some of the biggest challenges in relationships come from the fact that most people enter a relationship in order to get something. Does that sound familiar? Have you seen people ever try to do that? The biggest challenge in relationships come from the fact that most people enter into a relationship in order to get something. They're trying to find someone who's going to make them feel good. Well, folks, in reality, the only way a relationship will last is if you see your relationship as a place to go where you can give and not a place where you go to take. That, folks, that's why I love doing what I do each and every day, why I love being here with you. Why I hope that you love being here with me, because for the next hour, I'll give you all that I can give. You can give me all that you can give as well. 877-927-6648. Let's go take a look at these markets here right now. We've got the Dow trading up 45 points out at 14,557. The S&P up about 8 points, trading out at 1564. NASDAQ up 18 points, up about 0.5%, trading out at 3263. Russell 2000 up 0.7%, out at 953. NASDAQ up 0.5%, up 15 points, out at 2816. New York Stock Exchange up at 0.4%, up at 9103. That's up $38 over across in Europe right now. We've got the DAX trading up 57.7%. FTSE up 43 points, up 0.7% as well. We take a look at the U.S. dollar index, trading up about 25 ticks right now, out at 82.76. The euro back about 53 ticks. We'll take a look at the currency market. Gold trading down $9 right now, out at 15.96. Silver up just a tad, up really 2 pennies, so flat, out at 28.71. Light sweet crude, on the other hand, that is moving higher out there. It's up $1.85. You've got natural gas up about 1 2/10% as well. So maybe, I don't know, does it have something to do with, as far as light sweet crude, I should say, have something to do with regard to a lot of the folks over in, not a lot of the folks, but the big money folks in Russia, possibly taking a 30 to 70% haircut in their deposits that were in excess of $100,000 out there. I don't know, but we'll certainly take a look at it. Anything else that you would like to. Again, our call number is 877-927-6648. Let's start off by taking a look at the indexes. We'll start looking at the S&P 500. The S&P 500 right now trading at 1564.69. The S&P itself is up over right now for the day. It is up over a resistance area. That resistance area really being set up here by the bullish or bearish engulfing candle that was present back here on the what's this day, March 21st out there. So you can see well above that. It's at highs that we've seen here for the past week and a half, since March the 14th. The March 14th high was 1563.32. You're at 1564.83. What the S&P did last week, a rejected price at that 1546.72. That's a swing point low from October the 11th, 2007. And as we know, that sets up a possible run here for 1576.09. It traded at 1564.78. I say, come on and do it already. Release some information to us, because right now it's just in the middle of the stream out here. Let's go peek in on the other indexes, see what we have going on. You've got the Russell 2000. Russell 2000 also trying to take out its most recent swing point high. That swing point high coming in on March the 15th, that level 954. So far, let's see, it's gotten up to 953.50. That's the high as we speak right now. So that is trying to break out above those highs. What we can't see is the 1 to 1.272, A to B equals CD up. That has been completed inside the Russell 2000. Next level would be 983.40. That's a good ways up. That's another 30 points out there. That is on the Russell 2000, but you can see on the daily chart it is not overbought at all, so it could make that move. It has the room utilizing that indicator with it not being overbought at all right now. Let's go take a look at the composite. Composite right now also trying to trade over its recent highs out here. In fact, it is that high, that bearish engulfing from March 15th. That level, 32.60.62. It's trading out at 32.62.94. You get a close above 32.60.62, and that will certainly, you can see 32.72 is the 1 to 1.272. A to B equals CD up. Let's take a look at what the 1.272 butterfly would look like here. The butterfly, we would take a look at an expansion, folks, off of the September 21st high, that level 31.96.93, all the way down to the low of November 16th. So it looks like what the composite would form the butterfly pattern right around between 33.72 and 33.01. The actual 1.272 expansion of those sets of swing points is 33.01. First today, though, it must close over that bearish engulfing candle from March the 15th, 32.60 and 62 cents. So that is what you want to be watching for during the close of today's trading session. We take a look at the New York Stock Exchange. New York Stock Exchange here, which has been relatively weak. And when I say relatively weak, just taking a look at the summation index out here right now. It's trading into the resistance level. It's trading above it right now. And that resistance level, I'll blow this up on my screen for you here so we can take a look at it. Inside the New York Stock Exchange, what I'm referring to is I'm coming back and taking a look at the March 15th swing point. The March 15th swing point low, 9091.05. What the New York Stock Exchange did was it gapped down slightly the following day on March 18th. Actually gapped down quite a bit in an intersession. It traded all the way up to 9,086 and 60 pennies out there. This area was tested once. This was on March the 20th. If the New York Stock Exchange closes below 9091.05, you would have your second rejection of a swing point. You would have your second touch point for a resistance area. 3 touch points really helps you to identify a good area of resistance. However, today it closes above 9091.05, and it doesn't test the highs of that trading session for March 15th. It says 91.2877 would be its next target out there. So that's on your New York Stock Exchange. Let's go take a look at the Dow Jones. Dow right now is trading out at 14,549 out there. That has gotten up above the March 20th swing point. That high was 14,546.82 out there inside the Dow. The only now where the resistance is from a candle standpoint is you did have a bearish engulfing candle that took place. I'll draw the red line across my screen here. That took place on March the 21st. That says a small line of resistance would be the high of March 20th. Again, 14,546.82. It's trading out right now at 14,550.43. So that's the number you want to be watching for today. A close below 14,546.82 would say, okay, there's your bearish resistance line inside the Dow Jones. Let's see, what have we not taken a look at? We have not taken a look at the NDX 100. Let's go take a look at that because you got Apple on its move out here today. So let's go see. Now, inside the NDX 100, still really trading with inside that 0.786 Gartley sell pattern, which really completed at about 28.02 and a change. Right now, you do have the NDX here trading above this little cluster of candles that came in off of the March 5th gap up high. The high of the session, the actual high of resistance area, would be where this bearish engulfing candle had wrapped around that March 14th candle. That level, 28.12.29, trading at 28.15.09. So right now, you'd write down on a piece of paper 28.12.29 just to understand whether you've got a breakout or have you run into some resistance. That takes care of the actual indices. Let's go take a look at the ETF structure. see what we've got going on out here. We'll take a look at the daily chart of the ETF structure. So far today, the SPYs have got volume of 1.2 million shares. Let me just refresh my screen, make sure that, because that doesn't make a lot of sense. Let me make sure. Wow, unless I have a bad data feed, which is always possible. Oh, I've got the diamonds up. No wonder that didn't make sense. Okay. For the SPYs, it didn't make sense for me. The diamonds, it does. Okay. So far in the first 45 minutes of trading, 1.2 million shares inside the diamonds. That is attacking the swing point for March 14th. That has 5.3 million shares. So pretty decent volume here in the first hour. The level, the high of March the 14th out there, 145.35. The diamonds, I don't believe, have gotten up over that. Let's see. The diamonds have gotten up to 145.32. So they have not gotten up above the 145.35 level. Let's go take a look at the as far as where the diamonds can run to, really no resistance in place at all. So it's up above, slightly above the 1.618 expansion out there. So this thing has no resistance. It has clear sailing with it being up above its all-time highs out there. Let's take a look at the IWM because really you've got the same type of pattern set up here. The IWM right now trading into March the 15th. That has 35 million shares in the first 45 minutes of trading, 8.5 million shares. So good volume, 8.5 going into 35. The small cap showing some strength out here. Small caps should be able to at least tag the high of March the 15th at 94.96 right now. So far, interest session 94.72, so just a tad under, but it does have volume. We'll go peek down and take a look at the 10-minute chart, see what we have going on volume-wise out there as well. Let's go now take a look at the SPYs. SPYs trading into the swing point here of March the 13th. Let's compare volumes. That has 126 million shares so far today. In trading, it's got 17 million shares. So 17 going into 126. The SPYs here do not have the volume behind it. So they do not have the volume behind the move here, especially in that first half hour of trading. You usually are pretty lopsided. So the SPYs here, very interesting, not at all confirming the move that we're seeing inside the other ETFs out there. That kind of makes you say, something to think about. Again, volume so far, 17 million shares going into 126 million shares. No matter how I cut that, it's going to need a lot of volume coming in at the end of the day. Nonetheless, the high out here, 157.52 inside the SPYs. That is still game. That is the October 11, 2007 swing point high, 157.52. We'll go when we come back from break. We'll start taking a look at stocks that are popping and dropping. You've got Google up $8, Apple up $7.30. Priceline up $5. Vico, we took a look at that during the first hour. That is breaking out over a long-term consolidation area. MasterCard up $5 on the downside. Magellan Health off $2. Vertinex off $2. Red Hat off $1.65. LinkedIn down $1.35. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to the Money Masters Show, folks. Dow's up 24 right now. S&P is up 5. And, folks, if you have not ever had an opportunity to test drive the Tiger's Den, we are holding an open house here at TFNN.com. All the details on the front page out there. Do yourself a favor. Join the Tiger's Den. It does not cost you anything to join and test drive it while we have our open house out there. Just simply a great group of traders, individuals. I opened up the segment here really talking about relationships, friendships, and here is a place, here's an environment. You talk about where the where the rubber meets the road. I talk about the importance in any kind of relationships about being able to just simply go someplace to give. Well, there are folks that are inside that den that are giving on a continuous and ongoing basis. So it's a great place to develop some relationships, long-term relationships out there. I would suggest that you go give that a test during our open house out here. Question inside the den was, where are the bears? Well, let's go bear and bull hunting as we take a look at these stock charts out here. In fact, I can show you inside we're taking a look at the 30-minute chart of the ES Mini. I can show you exactly where the bulls are hanging out and exactly where the bears are hanging out. And we're going to take a look at is the exact same reversal candlestick pattern on the 30-minute chart. On the 30-minute chart, we're taking a look at what's referred to as an evening star candle formation. That took place here at 6 a.m. Between 6 a.m., this is a 30-minute chart, between 6 and 7:30 a.m., this 3 set of candles out here, this is where the bears are hanging out. Their resistance right now, tracked out for the day, is up at 1560.50. Where are the bulls hanging out? Well, the bulls made a Morningstar reversal candle. That took place between 9 o'clock this morning and 10 o'clock. Right now we can see that you've got price moving down in the ES Mini, and it looks like it's going to go test the support area. We'll see if this level holds. But here's where the bulls are hanging out. When you take a look at the ES Mini, well, you just simply utilize, now these are reversal candles, so we can see that price could easily just simply consolidate between this level. Just because if you're watching us on Tiger TV, if you're watching live, as you're watching price move down, right now, if on this 30-minute chart, you get a close below 1554. It's trading at 1554.50 right now. That would tell you that the bears have taken over that position inside the ES Mini on a 30-minute chart out there. So we can clearly see where the bulls are. We can clearly see where the bears are. And what you want to do is you want to use closes as these areas are attacked out here. So you've got the morning star pattern as well as the evening star. So now the question is, okay, if in fact the bulls lose out on protecting, this is nothing more than little battles, little wars that are going on out here. If in fact this area here gets, if you see a close below that 1554, and I'm using the low of the session from 10 o'clock, 1554. If you see a close below there, where's the next level of possible support? Well, it's really not down that far. You've got two dark cloud cover candles that came in. One at 2 o'clock on Friday, I should say. One that came in at 12 o'clock on Friday as well. So that next level of support on the ES Mini 30-minute, let's just go draw that across my chart here. We'll go ahead and put that in red, and so it's not that much further down. That would be the level of 1551.75. If that level breaks through, if the bears are able to take control and break through that level, where does that set up a next run to? Well, it sets up a next run all the way down here to the 2:30 time frame, 2:30 in the morning on March the 22nd, all the way down to 1535. And so you can easily see on any stock chart where the bulls are hanging out, where the bears are hanging out, and right now the bears are really hanging out inside the euro. So we're going to switch over to the currency chart out here, and we'll take a look at the euro. What I've got up on my screen here right now is the daily chart. I did this during the first hour. I'm going to go ahead and put up the weekly chart first out here because this is the key level. This is the one that you want to be paying attention to, and that level is the low of last week. That low, 1.2842. That's what you want to be paying attention to because if you get a close below that, now this is a weekly candle, so I would say if you get a close below it on a weekly basis, that has broken through a level of support. Why? Because that is a hammer candle, and we know that's where Super Mario Draghi, as well as others that were supporting the euro, that's where they were hanging out. Even though they've got some kind of deal in Cyprus, we really don't know what that real deal is out there, but we'll see, and that's where the bulls are. So we'll see if the bulls are going to defend their position inside the euro on the daily chart. So far, we'll go switch back to the daily chart. Daily chart, you can see trading off really, well below, well, really at its session lows for the most part here. So it's going to take on the support level here of really the lows of last week. The real support on the daily chart, the number there is 128.75. 877-927-6648. We get back, we're going to be looking for more bulls and bears in the stock charts that we'll take a look at. Be right back, folks.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. The Dow's up 10 right now. S&P is up 4 in the battle of the Bulls and the Bears. If we go back and take a look at that ES Mini 30-minute contract, we know where the Bulls are hanging out here. You can see that level was tested, the level of that Morningstar candle formation that came in. Basically, the low of 1554 at 10 o'clock. You can see, volume moving down was 118,000 shares going against 168,000 shares. So volume-wise, not enough to bust it down. We can see that here's where the current battle is where the current battle is underway, I should say, and that is at the price point level of 1554 out there. Now let's go peek in. I noticed Royal Gold, RGLD, was trading down just a bit here this morning. And when we were taking a look at the ES Mini on the 30-minute chart, we were looking at a morning star and an evening star pattern out there. Well, guess what? Royal Gold, RGLD, is the ticker symbol. It, too, has the same morning star and evening star pattern. Now, as Royal Gold was forming its lows back here in the early March 5th, made a close at 62.90, made a low of 62.67. That next trading session, the low open, actually, the open was at 62.73. It engulfed the candle from March 5th. It engulfed the candle from March the 4th. It engulfed the candle from March the 1st. Let's see, did it engulf February 28th? February 28th's open was 66.01. The close here was 65.93. So it engulfed 3 candles. It created the Morningstar and bullish engulfing candle. That was on the trading session of March 6th. So we knew here that here's where the bulls were. What does that mean? Just like we were taking a look at in the ES Mini on the 30-minute chart, the bulls in Royal Gold should be defending their position if price ever moves back to the level of 62.67. That is the support level inside there. That's where the bulls should defend their position if you were inside that trade. Now what we can also see is that so far this candle formation here that actually is underway today. This is if it were to close here right now at 69.69, this would actually form an evening star pattern formation. So it's a 3-candle formation out here. The candle here on Friday was a high wave candle. A high wave candle basically means that it has lost its way out there. Now that could be expected or should be expected. Why? Because we could just simply go take a look at this open gap out here. So as we take a look at the open gap, that's the red horizontal line going across my screen. Remember, if you're just listening on the radio or your mobile device at tfnn.mobi, you can catch this show streaming live to you. Just go to the homepage of tfnn.com, and after you've signed up for the Tiger's Den, then go ahead and click on the button over on the right-hand side that's got those 3 smartphones that will allow this show to stream live to your device. If not, catch the archive on Channel 10 out here. So we take a look. You've got a gap down that's open from the 14th to the 15th in February. So you can see as the candle was moving in on Friday here, high wave candle says you've lost its way. That's what it did, coming into an area of resistance. That's the area that now it's been tagged basically, we can say twice, because as well on March 21st it got up to a high of 70.88. So that is close enough for me and my work. So you've got here an area of resistance formed by the gap, by the evening star candle formation that is in place now. I don't know where the market is going to close today, so I don't know if this is truly going to turn into an evening star pattern or not. It just depends how it closes. But it's very easy on a stock chart to go identify where the bulls and the bears are hanging out. And that's what it is that you always want to be able to do. The very first thing is don't get caught up into whatever's going on in the headlines or what have you. It's step back. Take a look at where the bulls and the bears are hanging out. Take a look at price, the way that things are behaving out there, and then go make your decisions. And that is always in my opinion, that is a better way to trade. So that is on Royal Gold. Looks nice. If you ask where the area of support would be, well, we picked the bottom here, but there was an area of resistance that it got above here on Thursday of last week. Let's draw a line across. We'll use a red line as well on this. What you had here was a dark cloud cover candle. This dark cloud cover was on March the 13th. That sets up a resistance level. Now it's going to be a support level. That was the high of March the 12th. That high is 68.93 out there right now. So far during the today's session here, only getting down to a low of 69.15. But that is the top of the that was the old resistance line. We'll see if old resistance becomes new support. That was on Royal Gold, RGLD. Let's go take a look in at LinkedIn. LNKD is the ticker symbol. And let's go see what LinkedIn is doing. Okay, I don't see it here on my screen, so we'll go ahead and we'll put that up. LinkedIn is the leader in the clubhouse dollar-wise on the way down, so we want to see if there's anything in place here. So far, that candle today, not bearish, not at least just yet. It would need to close probably, I would say, down at about the level of around 176.70 would start to turn it into a piercing candle. No real bearish candles here inside inside LNKD. In fact, if anything, what you can do is we could take a look at, let's draw some old areas of resistance across the screen here so we can figure out where it finds support. Now, first you've got that Johnny Cash, Basil Chapman, that duo there, where they're walking the 9-period EMA. That's the black line, or the blue line, I should say, that you see going across my screen. And right now, LinkedIn trading above that. This candle right back here on February 20th, that is a bearish engulfing candle, and you had 2 of them. You had another one here on February the 25th. So setting up where the bears were hanging out inside of LinkedIn. So that's why I'm going to go ahead. I'm going to use the high of February 20th. That was the old resistance level. You can see that old resistance level, in essence, was tested after the market broke above it. Typically, when you break over a resistance level, you come back and you test it. and that's what it did. It got down on March the 1st down to 165.40. That was going against 165.20 in essence out there on February 20th. That is on LinkedIn. As far as volume-wise so far today, 722,000 shares going against 2.6 million shares, a little bit over an hour of trading. So you are starting to see some pretty decent volume in what has been a very strong stock out here. I would be taking a look at, we'd love to see LinkedIn pull back into about the low of February the 8th out there, around 140.13. Don't know if it will get there, but you can take a look at the top of that candle as well, 151.89 out there. That is where we saw the last breakout inside of LinkedIn. Of course, the ultimate buy on this would be to close that gap, but February the 7th out there, down at around 122. You got a little bit of, this is a small little bullish engulfing, by the way, here on March the 21st, but and that does mark a level of support. But the problem is that candle, that body is so small, and as far as what it engulfed was also very small, that I kind of maybe put that in as just a very small sign of support out here. I think what you're going to really use is that high of February 20th, that level out there as your level of support. That is inside LinkedIn. Let's go take a look at Red Hat, RHT. Let's go see what that is doing here. We'll go pull up that stock chart. That is moving lower this morning, and that is taking out an area of support out here. So RHT, we can see that is breaking below the bullish engulfing candle that was inside this equity. That bullish engulfing candle taking place here on February 27th. You can see this candle totally wraps around that body of February 26th. Let's draw the line across the screen, and let's go hunting for bulls and bears. Those of you watching on the stock chart, watching live, as you take a look at this area of support that has now been broken, where is it that you see the next real significant bull hanging out inside this stock chart? And I'm going to say, if you take a look at from November 13th forward, are there any candles that stick out to you that might be where the bulls are hanging out? Because that's all you need to do. You are the general of your own army. You may be a one-man, a one-woman army out there, and this is nothing more than a battle between the bulls and bears. And you want to make sure that you can go to a stock chart and easily identify where is it that the bulls have taken their position and where have the bears taken their position. It will make playing this game so much easier to do. I've given you enough time, and I know a bunch of you out there already selected this trading session here from the day of November 15th. You may not have known the day, but you were pointing to that candle. I could see you coming right through that television screen saying, Steve-O, it's right there, it's right there. That's one of our hammer candles. That's right, because you too have adopted that hammer candle. That is where the bulls really are hanging out. If we use a black line, we draw that across the screen, we can even see that hammer candle was tested with high volume. That's important to understand. If we take a look at that trading session where the hammer candle was formed on November 15th, only 1.5 million shares down there. This equity moves down on the 5th of December with big volume, 4 million shares, but couldn't really take out those lows. In fact, close up towards its session high for that day. That really is a clear indication of where the bulls are hanging out inside Red Hat. That is where it is headed to. It is going to head down to the 47.08-ish level. Maybe it's going to go test this high volume low intraday down at 46.34, but that's where the bulls were hanging out. We'll see. And right now you've got Red Hat trading at 48.67. What we've got to take a look at is a longer-term A to B equals CD down pattern. On the daily chart, your benchmark is taking a look at February 26th. That low, $49.10, 4.7 million shares so far today. An hour and 15 minutes of trading, 1.6 million shares. If I do the math correctly in my mind, this has the volume. In fact, let's go peek in on the 30-minute chart. Well, let's pick on a 10-minute chart out here for Red Hat. And so you do see volume actually picking up, not dissipating as this is moving lower. I'm going to refresh my chart here just to make sure. So take a look at Red Hat. We can see here gaps down this morning with 263,000 shares. In that last 10-minute session, did 309,000 shares. So we've got volume increasing on the way down inside Red Hat. Hat. I don't know if there's any news on this stock chart. Let me take a look. No, nothing other than a downgrade alert. Well, it's busting through support. We'll put this back on the daily chart. We can see that the Red Hat looks like it could be confirming an A to B equals CD down. So let's go draw that in on the chart and see where that takes us to in price, because it would be breaking that hammer low for sure. Your A point on this is your February 1st high, $57.10. Your B point is the February 26th low, $49.10. And your C point here is the March 8th high out there, out at $53.54. If we take a look at retracement levels here, just go see what that B to C leg was. Oh, it's a beautiful thing. The actual 618 would have been $54.04. It got up to $53.65. Nice work there, Leonardo Fibonacci. Now we take a look at the 1-to-1. 1-to-1 A to B equals CD. Takes you to 45.68. That most certainly would be testing that high volume low out there. Looks like Red Hat likely going to be headed back that way at least. Let me take this back a little further now and see what it is that we have out here. Oh, you've got this little area where there was a little sign of strength, this little gap up all the way back into January 19th, 2012 out there. So that was a full recap on Red Hat out there. Let's go take a look at MasterCard. MA is the ticker symbol. Let's go see if we can find any bulls and bears inside MasterCard. MasterCard today trading up nicely. Let's go see, though, where the bulls and the bears are hanging out inside MasterCard. Let's go ahead and get rid of this little yellow block out here. So now what we've got here is we've got, how about that? We've got evening stars all over the place. Yeah, looks like to go stargazing out here. Let's go take a look at the evening star that most recently formed here inside MasterCard. So MasterCard showing the bull or the bears absolutely hanging out up here at the highs. No question about it. You got an evening star. That's that 3-candle formation taking place between March 13th, March 14th, as well as March 15th out here. That high, that area of resistance should be right at about 531.25 out there. What other bearish candles do we have? Well, they're all over the place up here at the highs. You've got this another evening star candle formation right out here. This 3 candles from February the 21st. So let's go ahead and draw that line across the screen. We've got evening stars all over the place. A lot of stargazing going on inside MasterCard, let alone you got this little dark cloud cover all the way up here on January 10th, bearish engulfing on January 14th. Now let's go take a look at where the bulls are hanging out. You got to find the bears and you got to find the bulls. Well, we can see here the first bulls that show up that we can see is this little breakout here, this little gap up, this little window. January 2nd, well, that makes a lot of sense because we know that's the market's general gap up level. Let's go ahead and put that line in black. So that's a clear area of where bulls were hanging out. You got this little bull sash candle. So that's the next level here up above that gap. That is going to be, let's draw a black line across the screen. That is the session from February the 27th out there. That low, 507.97, but it's really the low of the prior session here, which is 507.36. There we've got some bulls hanging out. And the only other bulls that I really see here inside this chart here worth noting would have been this candle right here, which was on January the 29th. January 29th makes a little piercing candle. As we draw the black line, I'll actually put that as more of a dashed line. We don't use dashes enough around here. That is a level, should have been a level of support, but we can see that that failed. That's why it's a dashed line and no longer. We're going to get rid of it. 877-927-6648. Dow's off 29. Composites down a point. And the S&P totally flat right now. We can go barefoot water skiing. That's if you live down in the south where you've got pretty decent temperatures. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow down 27, S&P's up 43 cents right now. The Russell 2000 up $1. Otherwise, all of the indices are red. The DAX here trying to join the red. Boy, the DAX was up about over 1%, about 1.5%, I think, this morning. Now it's up 3 points. The FTSE giving back all of its gains as well. In fact, we've got the DAX chart up on the screen, so you can see almost at its session low. Session low so far, 79.09. It's at 79.12 right now. Was up as high as 80.30. And the DAX, of course, all this is really, it's all currency based out here. The euro down 107 ticks out here. So the euro is, now on the intraday chart, I've got a 30-minute chart on my screen here, truly moving into a oversold level. Of course, no bulls yet have shown up inside the euro on the 30-minute chart, so it can still run a bit lower. But I suspect here within the next hour or so, we should see Team Mario wake up from a nap that they took because they were up to the wee hours of the morning and start to try to support the euro out here. Of course, if we take a look at the daily chart, we can see, orders have been given as far as where to defend their positions, and that right now is the low of 128.75. That's that low of December the 7th out there. More likely, though, the real orders have been given out here, and we'll see if they hold. It is defend the low of last week's low, that hammer candle out there, 128.42 inside the euro. We'll see who is really in charge, the bulls or the bears, as that level is really where the largest battle, largest war is going to be fought today inside the marketplace. And, if you take a look at the opposite of that, really, which is the U.S. dollar index, you can see about as bullish of a candle as you possibly can get here. So the bulls really coming in and pushing up the U.S. dollar index. Of course, that is really nothing more than the basket of currencies. And, would you want to hold on to euros? I don't think so. And what is it that people want? Well, you've got light sweet crude, you got oil trading up about 1.5%. You've got gold that's down 7.80, but really with the move here in the U.S. dollar index, that's nothing. Silver's up 3 pennies, so silver also not pulling back. So the commodities, hard commodities like gold, silver, oil out there, looks like that's where people over in Europe may want to be parking there. I wish one thing I wish Tom's got on his system what gold is priced in euros. I'd like to see what that chart actually looks like today. I don't have the ability, or I haven't figured out how to actually do the conversion here on this chart. But maybe Tom, during his show today from 4 to 6, maybe he'll take a look at gold for us, see how that is priced in euros out there. It's got to be making a nice move out there. Let's go back real quickly here. Let's go take a look at one of those battles that were going on inside the ES Mini on the 30-minute chart. Oh, we can see that the Bears here. So if you're wondering who's in charge, the Bears broke through that support. That was now you got 3 minutes until this session is over, but that was the session here where the Bears had come in, forming that morning star candle formation at 10 o'clock, a clear close below that, and it's a next level of support out here, which was set up by that old resistance line, which was from the 2 o'clock session here on March the 22nd on Friday out there. That sets up a run, very likely here, pull back. Now let's just take a look at retracements off of swing point lows to highs out here. You can see it's really also done a dead cat pullback, but volume accelerating. This will not just pull back to 1544. It wants to come test where the real battle is, back here at 2:30 in the morning on March the 22nd. Folks, stay tuned. Basil Chapman is up next. It's always great to be with you. Stay tuned the entire day here at TFNN, and don't forget, go over to the homepage of TFNN.com. Open house on the Tigers Den. What a great place to hang out. Take care, folks. Have a great day. Look forward to seeing you tomorrow morning.